Hi guys, it's Stock Curry and welcome to the channel. Today we're going to be going over some earnings, including our earnings predictions for Apple and Amazon. We're also going to be looking over the past earnings from the past 2 days. It has been an incredible week. I have missed you guys, so I'm so excited to be doing this live stream with you guys. I cannot wait to see what you guys want to talk about. But obviously, we have got a lot of news because it's the biggest earnings week of the entire quarter. So, what I want to do is we're going to start with the earnings that have come out so far. We'll talk about where the markets are technically, sort of my predictions for where the markets are going. And then we'll look into Apple, Amazon. We'll look into those earnings and give you my predictions on those. And then after all of that is done, and I know that's a lot, we will get into your stocks that you guys want to talk about. So let's get started with some of the things that have happened in the past, just to kind of wrap it up for you guys and give you a little bit of preview. And we're going to go ahead and get started with Alphabet. I'll just blow this up so you guys can see. So Alphabet, which is Google, they reported a few days ago, and they missed completely on both earnings and revenue. And if we take a look at what happened to their share price, it went down, quite a bit as expected, and then went up, then went down. So this is, we're kind of in this boat right now. Now, what I want to point out is the drop right here. This is the big gap, the big earnings drop, down 3.75% today. And, this is the thing. If you were to look at Google or Alphabet as purely a technical trade, you'd be looking at this, you'd say, wow, it's below the 300-day EMA, it's beat up, it's probably gonna, go up. Like, I just don't see it going much further. And then wham, you have that. Of course, same thing happened with Netflix, right? Netflix had been beat down, beat down, beat down. We had this big gap down from the last earnings. I mean, Netflix just been getting absolutely crushed. You would think there's no way it could go any lower. And then whammo, down like 30% and then even more. So we are seeing stocks get absolutely crushed. The technicals right now are meaningless when it's all about the earnings. How is a company going to perform for earnings? So we started with Amazon, or Alphabet rather, not doing that well. Now, they did announce a $70 billion buyback, but even that was not enough to get the stock up. Okay, the other thing that I want to point out this is, Google earnings, they said it's going to be a warning for investors in Facebook and other online ad companies. So, we kind of saw that with Facebook. I was going to talk about this in yesterday's video, but I didn't get a chance to get the video out yesterday. So what I did is in the Discord, I just put up a quick information for everybody. And I'll show you kind of what I put up over there. So blow this up a little bit for you guys. So yeah, I just basically said, hey, I wasn't able to get a video out yesterday, and just kind of talked about Google earnings and what to kind of watch out for. So basically summarize what I was going to talk about. But what I want to get into also is the rest of them real fast. So Microsoft earnings beat across the board. Microsoft was really, really good earnings. And if we go over to MSFT over here, we can see it did jump 4%, almost 5% today. It's up another 0.8% after hours. But what I really want to point out is look what happened intraday. I mean, this is, you would expect with that kind of earnings beat, this would just go up. It didn't. If I pull up the 5-minute chart here, you can see it rose, and then all of a sudden it fell, and then it rose, and then it came back down. I mean, it was all over the place. This kind of went with the overall market today. It was kind of funny watching the news stories because the news stories came out. They're like, NASDAQ's up 1%, and then NASDAQ's down, and then NASDAQ recovers, and then NASDAQ finishes flat. And it was wild. It's very, very difficult to make any predictions in this market right now. And because earnings are so unpredictable, I'll just tell you guys right now what I did. I sold all of my trade stocks on Tuesday. And I don't plan on buying anything again until Friday because it is just so unpredictable right now. So that's what's going on with Microsoft. That was good. So you got the Google's bad, Microsoft's good. It's a mix. Chipotle earnings, they beat estimates because they raised their prices. Now, this is really important. We talked a lot about companies being able to have pricing power. And if companies have pricing power, that means they're going to be able to raise their prices so that they can overcome the higher costs from inflation. And it's really good to see the fact that Chipotle still had pricing power. They're still able to raise prices and overcome inflation. This is a really good sign. So I was really happy to see this from Chipotle. So what I want to kind of show you what happened to Chipotle, which is right here, CME. It was up 2.6%, but the stock still has been completely beat down. This is for beating earnings. I would expect this to go up. The market overall right now is still kind of bearish, so I can understand why we're not really getting up that much. But man, those were really good earnings. Okay, Spotify. Yeah, Spotify's down more than 12% despite beating earnings. So this is kind of what the problem that we're running into right now is these stocks. We can, in general, most people can make pretty good predictions as to whether a company might beat earnings or not beat earnings. But the problem is we're seeing stocks like Johnson & Johnson that missed on earnings, and yet the stock finished up on the day. We're seeing stocks like Tesla that beat on earnings, and yet the stock went down. I mean, it just didn't go down. I mean, Tesla went down, but then it went way down. What was this? A 13% drop yesterday or something insane? And it barely recovered today, 0.5%. So and Tesla beat earnings. So you just don't know. This is the problem we're running into is we can make all the earnings predictions in the world, but we have no idea what's going to happen to the actual stock. It's so hard to know. And that's Spotify. It beat earnings, and it was down 12%. So all I can say is, guys, be careful. Be very, very cautious because, stock doing well in earnings doesn't necessarily mean anything. All right, let's get into Facebook. Facebook reported. Now, this was a really, really interesting. So getting into Facebook, Facebook's earnings per share, the EPS or earnings per share, they beat. They were really good. Facebook had really good earnings. However, revenue came in below expectations. And I got to get to the company's forecast in a second. This is bad. As of Wednesday's close, the stock was already down 50% for the year. So you look at this and you think, okay, revenues was down. The forecast, which I'll talk about in a second, was really bad. But earnings were good. So what happened to the stock? I don't know. It's a complete crapshoot, right? If we take a look at FB, Facebook, Meta, whatever you want to call it, after hours, we're up 18% on a massive revenue miss. Now, it's really threw me off for a while. I'm trying to figure out, okay, why did Facebook jump 18%? I know they beat earnings, but they missed revenues. So what's up? Why? Well, the little thing I saw in here, and I don't know where it is. Okay, this. So their daily active users. This is sort of the key that everybody kind of looks at when it comes to these tech stocks, at least social media stocks like Twitter or Facebook or whatever, is you're looking at daily active users. And daily active users came in higher than expected. So there was actually a beat on that end. And keep in mind that Facebook had seen a big drop in daily active users last quarter. So the fact that they beat expectations, I think this is the reason it's running up. I don't really think it's the earnings that much. I mean, earnings were good, 272 versus 256, but I really don't think it was that great. I think it's daily active users that caused it to run up. And then the other part of it, honestly, is just the fact that, I mean, the sucker is down like 50%. It's, oversold. I think this is just a reaction like, oh my gosh, we finally got some good news from Facebook. Buy it up. So we are at 207. 207's good right now, but it's barely at the 21-day EMA. It's, yeah, a big jump, no doubt about it. But shockingly, not as high of a jump as it looks like. 18% is great. Don't get me wrong, but it's not actually as good as it looks. And I think this is going to kind of go the way of, Tesla, some of the others, where it's just not going to hold. I don't think this is going to hold. I think we're going to get a little bounce off of the 21-day, and I think it's going to go down a bit. I could be wrong, but we'll see. But yeah, I don't think this is going to last for Facebook. So really interesting on Facebook, mixed earnings, huge rise in the stock price. But again, I don't think it's going to last. Okay, let's go. Where was we? We were over here. That's Facebook, and then the forecast. Facebook forecast points to a possible revenue drop for the first time after a decade of growth. So we talked about the revenue going down lower than expectations. They're now forecasting their first revenue drop, meaning not only will revenue not go up as much as it has in the past, but it actually start going down. So this really is not good for Facebook. I think people are going to start grabbing hold of the forecast a little bit more tomorrow, and I think we're going to see a bit of a drop from the 18%. I think Facebook will close below the 21-day EMA, which was at where's the 21-day EMA? Where is it? 203. So I think Facebook will close below 203 tomorrow. That'd be my prediction. Okay. Ford saw its first quarter profit dragged lower by their Rivian stake, but they maintained their overall earnings guidance. So revenue was down because of Rivian, but the earnings were kind of in line with expectations, which is, decently good. I also was looking forward and trying to think about their deliveries, like their electric F-150 and all the things that are going extremely well. So if we look, the EPS, the earnings per share, was actually 38 cents versus 37. Revenue was higher as well, 32 versus 31. So despite the Rivian stake loss, they actually beat on earnings. And I haven't actually looked at Ford stock yet. Let's see what we got. Plus 1.89% after hours. Basically nothing. That's really, it's not even above the 10-day EMA. So really, Ford went flat, didn't really move. Anybody had options on this, they're not going to be happy tomorrow. Okay, let's see. Then we move on to Pinterest. Pinterest jumps after earnings. Pinterest stock rose. They beat on EPS and revenue. But look at this. They slightly missed expectations for monthly active users. Now, here's what gets me about Pinterest. Let me pull this up. This is where the stock price makes literally no sense. So you guys remember this gap back here 2 quarters ago? This major gap. So I'm going to just give you a reminder of what happened there. So this quarter, Pinterest beat on earnings and they beat on revenue. Same thing they did this quarter. But their daily active users went down. And the stock price absolutely tanked. And, everyone's like, that's so stupid because their revenue's up, their earnings are up, and yet their daily active users are down. It's the only bad thing that was part of that earnings. Their stock price tanked, and then it just has been an absolute falling knife. Then we get to today. What do we get? Beat on revenue, beat on earnings, missed on daily active users, stocks up 9% after hours. I don't know. You cannot predict what a stock is going to do after earnings. You just can't. If you're buying calls or puts, trying to play earnings, you are gambling. You literally cannot predict it. All right, after hours, $20.41. The 10-day EMA is at $20.66. A 9% gain in PINS does not even get it above the 10-day EMA. That is extremely bearish. Not good news for pins. Another great quarter, but the stock remains bearish. All right, pull up another one for you real fast. Qualcomm. Qualcomm revenue popped 41%, driven by Android phone chip sales. Now, this I really keep my eye on because, Qualcomm, you start getting into chips, semiconductors, all those sort of things. We start talking about the supply chain issues, and I'm really happy to see Qualcomm doing well. This is a sign to me that supply chain issues are getting better, that we are recovering from our supply chain issues, and this is a really, really good sign. I think this is going to bode well for stocks like Apple and Apple's reporting tomorrow. I think this bodes really well for Apple. So this, I think, is really, really good news, but we'll see. Again, it's really hard to predict. We'll talk about Apple in a minute, but this, I think, is really good news for Apple. All right. Just not an earnings thing, just a note. Robinhood cut about 9% of their full-time employees. So, yeah, that's going to be fun. Let's see what happened to HOOD when that news came out. Yeah, all right, down 5%. Remains a falling knife. This, outside of that initial spike, it has literally just been dropping nonstop. Well, anyway, they got what they deserved. Moving on. All right, before I get into earnings predictions, I saw this article. I got to talk about this. So 21 large cap stocks have now crashed at least 50%. That is shocking to me. We're not talking about penny stocks here. We're talking about large cap stocks. All right, let's go through it. Let's just see what we got on the list here if we can. Okay, there we go. So first up is ticker PDD. I actually don't even, what is that? Pinduoduo. I'm not super familiar with that stock, but it's down. So I zoomed in too much. It's down 75% from its high, and it's down, 40% so far this year. Zoom, down 75% from its high, down 46% so far this year. DocuSign, 73% and 44%. PayPal, 73%, 55%. Now, when it comes to PayPal, I think this is completely oversold. PayPal should not be down this much. I definitely bullish on PayPal at this point. I think this is way oversold. Netflix down 71%, down 67% on the year. Kind of makes sense. They're losing subscribers. Moderna, this was kind of an interesting one, down 70% so far, down 42% on the year. Remember, one of the reasons I didn't really like the pharmaceutical healthcare stocks as far as investing for a possible recession is because I felt like they ran up way too much due to the pandemic and people thinking they were just going to make tons and tons of money off of vaccines. And now that the stock's down 70% from highs, I think Moderna is finally back at a level where it's reasonable to buy into as a recession play. So I actually do think Moderna might actually be a good stock to buy now. Lucid, this is one that was just retail heavy, running up with very few sales. We know they're going to be doing share offerings in the future. So down 70% from the high, 53% in the year. Kind of makes sense. I know a lot of people were shorting that even as it was running up. Etsy's kind of an interesting one because it's retail, but I don't know. I'm not really sure what to make of it. I don't know what EPIM is. Penn National Gaming. This is another one that was retail heavy that people were just buying up like crazy. Down 60% on the year, 60% from highs, 29% on the year. I don't know what a lot of these are. Let's see. I'm not super familiar with a lot of these, but then we get Facebook, which is crazy because Facebook's actually a mega cap, down 52% from highs, 46% on the year. Although it did gain back quite a bit of that after hours. Win is another one, although I know they've been kind of hit from the whole pandemic thing, but down 50% and 20%. Allison is a corporate company. They do a lot of software for corporations. So that actually, these guys are like number one in the game on a lot of their software products. So this really concerns me. It says that corporate spending is down, uh, which I guess they're doing it to keep earnings up, but that's going to hurt a lot of people that supply things to corporations. So anyway, I just found that article to be really, really interesting, that we are really, really in a bear market. I mean, really. Okay, the other thing I wanted to kind of go over now is just one thing real fast. So I'm going to pull up QQQ again, pull up the daily chart. So we talked about how I haven't really been doing any trading over the past few days because I just, I just don't know what's going to happen. So I did make a trade low the last week, and I apologize I wasn't able to get this on Twitter. I was traveling, so I couldn't just get it out everywhere, but I did post it in the VIP Discord for people. When I think this was Thursday, when I saw the close below this Fibonacci retracement level on Thursday, on Friday, we opened up a put option, and then I had a take profit price at $318, which it hit on Tuesday, although I actually sold this a little bit early, around 320. However, this drop from Friday to Thursday, we profited 119% in 3 days. Here, I'll show you. We bought this for $5.55 on the 22nd, which was Friday. And then we sold it on Tuesday, the 26th for $12.15. So it was 119% profit. I apologize for not being able to get these on Twitter because I was traveling. But of course, I did put them out in the VIP Discord. So, if you guys, just letting you guys know, like, if you guys want to know everything I buy and sell, even if I don't always, get it out on Twitter or whatnot, everything I buy and sell, I'm going to put in the VIP Discord. And more so, I'm going to explain why. So we also had this AAL one that I didn't get a chance to talk about. I think this was a Thursday one we did. So I bought the AAL $21 put at 48 cents and sold it at 83 cents, a 73% profit. So 73% profit on that one. SPY, we lost a little bit of money on, but not much. And then, I don't win on all of them. I'll tell you that. And then I was kind of saying, like, I'm tired of waiting for a $2 drop that might not come. I'm just going to sell it or take profits. So I sold, took 119% profit. If I had held, probably could have made about 140% profit. But, I'm still happy with that. So just a reminder, guys, if you want to know everything I'm buying and selling and you want to get in on these trades so you can make 119% profits with us, you can come join the VIP Discord. It's at stockcurry.vip/VIP. Just go to stockcurry.vip/VIP. It's just $20 a month. And, one trade like this, I mean, we made about $2,000 on this trade, literally one trade, and you'll more than make up for your $20 a month. So, come on, join us and, get some of these profits in your portfolio. Just to kind of show you where we're at in the $1 Million Challenge portfolio, we started the year at around $3,000. We're currently at $4,574. So we're up about 50% on the year. Obviously we're way off of $1 million, but we already knew $1 million was going to be nearly impossible. The point is, I'm just trying to get this up. So, we're 4 months into the year, we're up 50%. So like I said, guys, just come join us. We're making money. I'm here to help you guys make money and profit with us. So that's the whole point of the VIP Discord. Come on over. Okay. Let me what do I want to talk about next? Okay. So now we got more earnings coming up, and I just pulled this up to kind of show you how important Thursday is going to be for earnings. We have the biggest companies in the world by market cap reporting earnings on Thursday, including Apple in the number 1 spot and Amazon in the number 5 spot. To give you an idea what earnings are coming up, let me see if I can pull this up for you guys. There we go. So earnings coming up this week. We've got, tomorrow. So before the open is Twitter, I don't think Twitter's really going to matter. Elon Musk has already put his bid in. I don't really. Earnings are irrelevant. It really doesn't matter what earnings are. Twitter shouldn't move up or down much at all. Caterpillar, I know some people invest in this one in their long-term portfolios, so you might want to look at that one. And then, a few others. But the big ones that we're really, really looking at for after the close, we've got Apple and Amazon, and then, some smaller ones like Intel. Obviously, Robinhood should be terrible. You don't lay off employees unless you're losing money. So, but really, we're going to be looking at Apple and Amazon. So what I want to do is go over some of the earnings expectations and then give you guys my predictions. And then after we're done with that, we'll get into whatever you guys want to talk about. So we'll start with Apple's earnings expectations. So we are expecting earnings per share to be going up $1.43 versus $1.40 year over year. Services revenue is expected to rise at all, and revenue is expected to grow as well. So overall, we need Apple to have an increase in earnings and an increase in revenue. Given the slowdown that we've had, earnings should happen. I mean, as long as you've got an increase in prices or whatever, you should. But the problem with Apple is they're not able to raise prices as fast as everybody else. They can't just, generally phones go down in price over time. They don't go up. So, and same with the computers and laptops. So I think Apple's going to be a little bit difficult time beating earnings, especially if their supply costs have gone up. So this is going to be an interesting one. Apple's really going to be interesting because they don't have the same kind of pricing power that a lot of other companies have that move products at a much faster rate. So I don't know what's going to happen, but definitely whatever happens, it's going to move the market in a massive way on Friday. So I literally can't predict it. The other thing to watch out for in Apple is that they're going to have a large buyback. So, Apple is already doing a lot of buying back on their stocks, but if earnings are good, it's just not going to matter. So we'll see. We'll see what happens. It's the largest company in the world, so it's going to be one that we need to keep our eyes on and pay attention to. If we take a look at what's been happening, Apple actually has performed better than most other large cap tech stocks. And, none of the other large cap tech stock came anywhere close to 52-week highs. Last month, Apple did. So this is really performing extremely well. And they're expected to beat or increase earnings and revenue. So the thing about Apple is they have really high expectations. This isn't a stock that's been going down, 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 down. They could bounce on decent earnings. They're really going to have to have really good earnings if they're going to keep the stock price up. So it's extremely hard to predict. But if I was going to guess, and it's literally just a guess, I'm going to guess that Apple maybe goes down a little bit after earnings. Not a lot, a little. And that's just a guess. Now, I do want to point out that on the technicals, it is actually, it's extremely bearish with a reversal indicator. So let me explain. So when you have the stock going down like this and you get this sort of upside down hammer, an inverse hammer. So you got like the top, if you think about like Thor's hammer, right? Kind of got the top of it and then like the hammer parts down here. This candle is a reversal candle and it points to a rebound in the stock price. And so that's exactly what you saw here. You go down, you get the reversal candle, the inverse hammer, and you go up. Well, if you'll notice, we have another inverse candle here. So this is an indicator of a rebound. Now, you can't deny the fact that the MACD is still bearish. The RSI is still bearish. You can't deny that, right? Like over here, we're in the exact same boat, honestly. The other thing is Apple has a long history of bouncing right about this level, just a little bit below the 200-day EMA, which we're at right now. So if they look at the technicals all point to a bounce on AAPL. But again, it all depends upon earnings. So huge unknown with AAPL, very difficult to predict. All right, let's go talk about Amazon, the 5th largest stock by market cap. And the one thing I'll say that's good about Amazon is that the expectations are complete crap. Let me explain. Analysts estimate $8.55 versus $15.79 a year ago. They're literally expecting Amazon to have earnings that are half of where they were a year ago. I mean, and they're expecting revenue to rise year over year. I mean, when you are already expecting really bad earnings, it's not that hard to beat. So I think Amazon has a very good chance of beating earnings for the sole fact that expectations are trash. So I actually think Amazon could beat earnings. I think it has a very strong chance of beating earnings. The only thing to really keep your mind on is if Apple earnings are bad enough, they could drag the market down even if Amazon beats earnings. The other thing to keep your eyes out is, analysts expect Prime Day to take place in Q3. But here's what analysts say Amazon will get a boost from fuel surcharges, Prime membership hikes, and other factors during this inflationary period. So Amazon has been raising their revenues through an increase in Prime membership hikes, fuel surcharges, things like that. So with earnings expected to be so much lower and they've done all these things to keep them up, in my mind, all signs point to Amazon beating earnings. Okay, that's my prediction. A complete and total beat. Does that mean the stock will go up? No. Let's go take a look at the stock. And we'll just take a look at technicals right now. So, a couple things. You are still completely bearish on the RSI, still completely bearish on the MACD, still completely bearish here. However, you did get a bounce off of the 0% Fibonacci retracement level. This is a good sign. So technically, and we're up 2% after hours, which makes sense. Technically, Amazon should bounce and it should go up. Okay. Technicals point to Amazon going up. Earnings expectations point to Amazon going up. Will the stock price go up? It's a crapshoot. I have no idea. But if I were a betting man, if there was one stock I would play earnings on, I would go long on Amazon. But I'm not going to play earnings because it's still too risky. But if you want to play earnings, this is the only stock I would play earnings on, and I would go long on it. I wouldn't necessarily do a call option because implied volatility on options is through the roof going into an upcoming earnings. What I would do personally is I would do a vertical spread, a bullish vertical spread. So either sell the put spread or buy a call spread and play it that way. That way, and basically just bet that it's not going to go below the 0% Fibonacci, or maybe just bet it's not going to go below maybe like 2,800, somewhere in there. That's the way I would play it. But again, it's too risky. I personally am not going to play this. Okay, that was a lot because we are in the midst of the busiest earnings season of the entire quarter. All right, let's go through your comments and see what you guys had to say. Oh, yes, please. Don't forget to hit the like button. And if you're not a subscriber, go ahead and subscribe to the channel too. I appreciate that. Thank you very much, Richard. Let's see. What is this? Looking forward to you being on stream with Keenan, Mo, and Larry one day. Man, that'd be awesome. I love those guys. All three of those guys are amazing. And I know a lot of you guys found this channel from Larry Jones. Keenan's Discord is amazing, guys. I would love to be with them one day. You know, we'll see what happens. Leaving that one up to God, and if it works out, it works out. Let's see. Oh, prediction for AMD. Well, let's go take a look, see if I can find something here. Give me a second. I'm just going to do a quick Google to figure out what their expectations are. Where is it? Yeah, okay, so I can't find earnings expectations, so we'll just pull up on. There we go. Ooh, wow. Hard to say. Just looking at the technicals, you do have a pretty strong support resistance line here. Let me just pop that onto the chart real fast. Yeah, this is a really strong support resistance line. Yeah, a lot of touch points. And where are we at on it? Pretty much right there. We are literally closed right at it. Well, based upon the technicals, you'll usually bounce off of a really strong support level. Based upon the fact that Qualcomm had really good earnings, I'm going to guess that they're going to beat earnings and the stock will go up. Total guess, but that's my guess. Yeah. So yeah, you're right. Come on. After this week, that is going to matter. That's really nobody cares until next week because this week is all about earnings. But next week, we're definitely going to have to kind of get back into that. You know, keep in mind that the Fed raising interest rates by 0.5% or 50 basis points is already priced in. So unless they do something crazy, you know, that really it's already priced in. That's really, honestly, the reason why the markets have been going down so much ever since, I can't remember where it was, somewhere in here, where the Fed talked about the fact that they were going to do a 50 basis point rate hike as well as start selling off some of their assets. And that's what caused this whole downfall that we've seen. So it's honestly, it's priced in at this point. I don't think we're going to talk about it, but I don't think it's really going to move the markets that much unless they do something really unexpected. Let's see what else you guys talking about. That's a good question. So if Apple and Amazon report good earnings, do I think the downtrend will continue? Short term, no. Long term, yes. So in the short term, technically, we are pretty much ready to bounce. We have it's not big. Well, it's not really a really good hammer. But it could still rebound off of here. We are up 1% after hours. So technically I could see us rebounding from here and getting, you know, going back up probably to about this 38.2% Fibonacci retracement level, right around 350 on QQQ. And I think if Apple and Amazon have good earnings, it could certainly kickstart the rebound upwards, at least until we start getting closer to that Fed meeting in a few weeks. And then, you know, that might cause us to start going back down again. But the real reason I think I see that, I don't know if you guys can see it. See if you can follow my mouse here. But there's something called a head and shoulders pattern, which is bearish. And if you think about it, it's kind of like a shoulder and then a head. And then if we get that rebound from Apple and Amazon, we'll have another shoulder. What are we at? The end of May? We could, yeah, well, pretty much no, right around that Fed meeting. Right around the Fed meeting, we could break below the current level and just go down from there. So short term for the next 2 weeks, yes. Long term, nope. Let's see. No, I am not doing any trading until Friday at the earliest, and probably not until Monday. I don't like playing earnings. I like to play things that I feel like are, I wouldn't say certain, but at least like give me a 70% chance. Earnings are like gambling at this point. I know I don't plan on doing any trades. Let's see what else we got. Okay, here's a good question. So, how do IV play when it comes to earnings? And you have an option during earnings. So, starting about 3 weeks, maybe 4 weeks before earnings come up, you're going to see IV or implied volatility start to really, really increase. And it maxes out the day before earnings or the day of earnings if they're reporting after the close. And the reason for that is people are buying calls and puts in anticipation of a major move in the stock post earnings. So as more buyers get into the options, that causes them to become more expensive because you have more buying pressure. And that expensive shows up in IV or implied volatility. Now, after earnings, right after earnings, implied volatility tanks. It goes down by about 80%, 70 to 80% drop in IV after earnings. So that's the thing that a lot of people don't understand is you have to overcome the implied volatility to make money. So take Apple, for example. The single leg options for this week, your implied volatility, even at the money, is nearly 100%. Okay. Now let's take something that already had earnings. Let's do Microsoft. All right. So this is a good example. I can't show you what volatility was before, but notice how all the calls out of the money went way down. Microsoft was up 4%. It was up $13, but the options still went down. The only options that went up were the ones that were in the money, and even the at the money only went by 10%. The problem is a lot of people buy these out of the money calls because they're cheaper, and then earnings come and they actually lose money on them. So the stock was up 4%, up $13, and yet call options still went down. So this is a great example of how this is called an IV crush or implied volatility crush, where even when the stock moved in the right direction, the options still lost money because the implied volatility went down post earnings. So that's kind of what happens. That's why buying a call or put is just not a good idea. Let's see what else we got here. Yeah, cryptos. I'm not doing anything crypto. The problem with crypto is it trades in line with the market, and as the market goes down, crypto goes down faster. So I'm not touching cryptos. Let's see. Anybody just trying to look at spicy curry. Hey, if you guys made money with me over the past week, like on some of those trades, just put some curries in the chat. Let me know. I want to know if you guys made money with me. Let's see. What's new with TAT? Nothing really. Revenues have been going down. which is not good. Keeping my eye, I'm holding for now, but I really don't like the back revenues have gone down. That's really not a good sign for a growth stock. Good question. Tesla long term. Well, I'm not sure if you guys saw the video. I talked about this a few days ago, a few weeks ago. Long term, Tesla still has a very high PE ratio. And I've talked about how it's not going to remain the darling of the stock market forever. And I think Tesla's PE ratio is really going to go down. Now, whether the PE ratio goes down because the stock trades flat and revenue and earnings rise to meet the current stock price, or if the PE ratio goes down because the stock price goes down, that's kind of unknown. Long term, technically, Tesla is still bullish. However, it really just dropped because of the Twitter thing, and people think Elon Musk gonna have to sell Tesla in order to buy Twitter. But long term, come on, this is still really bullish. So I, I like it. I don't like the fact that this trend line that started in March of 2020, it fell below it once. Now we're below it a second time. That's a huge red flag to me. If we take a look at what's the weekly show? Yeah, kind of flat. What's the monthly got? Oh, that's not good. That's bad. That's bearish. So the monthly chart on Tesla, the MACD just had a death cross for the first time in a long time. For the first time since 2018, Tesla just had a death cross on the monthly chart. Ouch. I don't know. I mean, look, it's still in an upward trend, but yeah, that's not good. Tread cautiously. I hate to give a prediction this early, but it's very possible we may be seeing the very, very beginning of Tesla falling out of favor and dropping in price. I'm not going to say it's going to go down to the 300-day EMA at 130 or 300-month EMA at 130, but yeah, it could definitely. This could be the very beginnings of something bad, some long-term downtrend on Tesla. I'm not going to go out and make that prediction yet, but definitely keep your eyes on it and just red flags. That's all I'm going to say. Red flags. All right. What else? Oh, wow. Look at this. A super chat. Thank you, Richard, so much for the $20 super chat. You're amazing. AAL, American Airlines. I thought they already reported, didn't they? Yeah, they did. As I recall, American Airlines reported they beat earnings expectations, but then they've just been kind of coming down with the overall market. I mean, just technically, it looks like we're going to get a death cross. But if the markets go up the next 2 days and we rebound, I think this can keep going up. I think we can get above 20 short term. And then longer term, I mean, it never ever recovered from the pandemic. It still has quite a ways to go up. I think the fact that they beat expectations and we're seeing this go up, I think that's a good sign. I'd say I like AAL for both short-term and long-term holds. And then SSRM, I know absolutely nothing about this. Never heard of it before. So all I can do is give you technicals. And the technicals are really, really extremely bearish. Like really bearish. Not only did we have a death cross a while ago, but we're about to get a crossover on the 10-day and 21-day EMA. And that's going to happen tomorrow. And when the 10-day drops below the 21-day EMA, that is confirmation of a long-term downtrend. So very, very, very bearish. I don't know what you're doing with this stock, but if I were holding it, I'd be selling it and getting out. All right. And thank you again for the super chat, Richard. I really appreciate it. All right, we'll talk about Beyond Meat. I know this is one that a lot of people like. I watched Jeremy Financial Education's video on this a couple days ago, and I gotta kind of agree with his analysis. Beyond Meat's really not trending in the right direction. They're getting beat out by I think Jeremy said Impossible, and then a few others. Yeah, they're not trending in the right direction. Where's the financials? Income, quarter. Yeah, you never, ever want to see revenue go down year over year. That is bad. So, it's downtrending and it should be downtrending. Yeah, it has high short interest. It very well should have high short interest. Just because people are health conscious doesn't mean this company is going to be the one that they buy from. So I don't know what to tell you. Revenues are down. And they're not making any money. So definitely, that it should be turning down. It should be shorted. Okay, so dollar cost averaging in. Let me be careful how I say this. So I know that Larry and Stockmo and Keena Grace had a live stream earlier today where they talked a lot about dollar cost averaging in. I know they all are. I have to say this. Am I dollar cost averaging in? Yes, a little bit, very little. By and large, I'm just holding cash. I'm not dollar cost averaging in much at all. The only things I am dollar cost averaging in on are stocks that have generally been trending up as the market's been going down, like VALE, CLF, things like that. I have not been dollar cost averaging in outside of, I think, maybe 3 or 4 stocks. Everything else I've just been holding cash on. So, I think it's too soon. I don't think we're going to see a bottom on this market until a recession starts. I just don't. And I I don't know when all that's going to happen. Generally, we are in a midterm election year. The stock market normally goes up starting in, it starts flattening out in October, and then it goes up in November. So I might start dollar cost averaging in a little heavier in October, but not until then. I still think the market's going to drop until October, or at least through October. Hey, man, glad to see you making money with us. Really appreciate the curry. Let's see what else we got. We're kind of nearing the end, so I'm just kind of seeing if any other questions stand out or if there's things people have been, more than one on. All right, a few people asking about BA. Let's go take a look. Boeing has had problems upon problems upon problems. I don't know what it's going to do, man. I really don't. The fact that it's down so much so fast, we could see a rebound after earnings, but to what level? I don't know. Maybe a little rebound and then it keeps going down. This is just not a company that's been doing well at all for a long time. Ever since their Max 8 planes kept crashing. What ended up coming out of that is that Boeing really didn't care a lot about safety. And then I think the Dreamliner, they were trying to get up and running, and the FAA went and said, hey, we want to see if there's any problems with your Dreamliner after the whole Max 8 fiasco. And as they started digging, they found problem after problem after problem. They're still finding problems. So I think that got delayed like another 2 years or something. It's just a nightmare. Every news story I read about Boeing is bad. And it seems like it just keeps getting worse. I know they have a new CEO and everything, but it's not turning around. Their culture, the problem is the company culture was all about the stock price. It wasn't about building good airplanes. That kind of changed, I don't know, 30, 40 years ago. And that kind of culture change it's destroyed the company. Absolutely destroyed them. So I don't know what to say, man. It's the stock price is going down, and I don't until they can get that culture turned around, I don't see it being good. Uh, but it's one stock, you know. Uh, uh, Airlines are buying more and more airplanes from other manufacturers. They're kind of cutting back on what they buy from Boeing. And airline stocks themselves are making money based upon how many people they can get on the plane and whether or not they can charge enough for a ticket to make up for fuel costs. And so buying a plane from Boeing, like who cares? They're going to go buy a plane from somebody else. Really, it's airlines aren't as affected by Boeing much anymore. So I don't think there's that much of a correlation. Boeing obviously stay away from it, but the airlines I think can still go up. Okay, let's see if there's any others. Hey, Richard, so glad to see you making money. Wow, you must be making a lot of money. 2 curries. Glad to see it. Thank you so much. Okay, curry emoji. I got you, man. I got you. Okay, we'll talk about DWAC and then I'll talk about Volta and then we'll end it. So, don't put any more stocks in the comments. These are going to be our last 2. So DWAC, as we know, DWAC started going down, 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 down. You know, I don't know how many times I can say it. The stock is worth $10. That's all this stock is worth. It is worth $10. Notional value, right? Like the actual physical value, $10. Now, anything outside of that is just pure hype. The $100 is insane. You're paying 10 times as much as the stock is actually worth. Keep in mind that as of right now, DWAC is not Truth Social. They might merge with Truth Social, but they're not Truth Social. They are a SPAC, and it is worth $10. So this drop made all the sense in the world to me. Obviously, you get one green day, and people are like, oh my gosh, buy back in. It doesn't always work that way, guys. Be careful. That's all I got to say is be careful. One green day does not mean it's going back to $100. It is still worth $10. So just be careful with it. You might get a little bit of a pop, maybe up to 60, and then it might start going back down again. So I get it. You're excited because you're up, 9% after you're already down over 50%. But in the grand scheme of things, this is still a massive falling knife. So just be careful. I get it. You do have a golden cross on the MACD. Like I said, you could probably get up to 60, but I don't see it getting above that. So tread carefully. And the last one is going to be VLTA. So VLTA is the last one we're going to talk about. And I know a lot of people were in this because Larry Jones really liked the stock. We had our SPAC merger at this point right here. It initially dropped. I said I thought $8 might be a good price to buy in at. Then it rose up. And then it came back down. And then it rose up. And then, well, reality set in. We're now down to $2. So just technically, anybody know what this is on the technicals? What we call this? It's 2 words. Anybody know? I'm sure somebody will post it. It's a falling knife. So I don't like to play falling knives. The problem with falling knives is you never know when they're going to bottom out. Take a look at the financials. We have no earnings. We have a price to sales ratio of 10, which honestly is still high. Remember, it's not a value stock until it's below 4, and it's not cheap until it's 1. Right now we're at 10. So I know this sounds insane, but based upon the price of sales, we're still more than double where a value stock would be at. Let's go look at revenue. 12 million. Okay, revenues are increasing. This is a good sign. 4 million, 7 million, 8 million, 12 million. This is actually a good sign. You definitely want to see that. Earnings, however, are getting worse. Negative 12, negative 43, negative 74. That's a bad sign. You definitely don't want to see that. Let's go look at cash flow. Net income, negative 276 million. Why did it, how did they increase cash by 203 million? Did they issue stock options? No, only 30 million there. Did they do bonds? No, they actually paid off their bonds. Oh, they took out a loan, $350 million loan. Guys, what is the one thing you do not want to do as inflation is going up, and especially as interest rates are going up? You don't want to have debt when interest rates are going up. You have a company here that's losing money that just took out $350 million loan. That's awful. Let's see what else we got. Oh my gosh, lost 428 million. Yeah, guys, this is, you got a $350 million loan, 260 million cash on hand. You burned through 200 million. So this cash is going to last you one more quarter. You're going to have to do it again. It's bad, man. It's just bad. Yeah, guys, it's bad and getting worse. That's all I can say is this is bad and getting worse. I would stay away from the stock. It's awful. One more super chat. Thank you so much, Juan. Appreciate your $10 super chat. You guys are amazing. Guys, Juan has a amazing channel. If you guys haven't seen it, this guy is an incredible YouTuber. You know, just because somebody has a ton of subscribers does not mean that they are a good YouTuber. Some of the best YouTubers barely have any subscribers. And Juan is one of those guys. He's an amazing YouTuber. He only has 3,000 subscribers. Definitely, guys, go check out his channel. I'm going to put this in here so you guys can see it bigger. Give me a second, Juan. I'm going to hook you up. Just got to create... There we go. I just added it. There you go. Okay. Come on. Okay. YouTube.com/Juan Valdez. You guys go subscribe to this guy's channel. He is amazing. Really, really incredible YouTuber. I'd love to jump on and do a live stream with you again. You guys are awesome. So that's going to end it, guys. Go support Juan. He's amazing. And like I said, if you want to jump into the VIP and you want to make the kind of profits we've been making, the 70% day trades, 120% 3-day trades, whatever. Come join the VIP. I've got all my trades in there. stockcurry.vip/VIP. Thank you so much for hanging out with us, and I hope you guys have a lot of success, and I will see you guys